All right, guys, welcome to the Naked Forex webinar. I'm Walter Peters. I wrote a book called Naked Forex. If you're nice to me and you email me, I can send you other books on Naked Forex systems. Today, what I think we'll probably do in the first half is talk about trading with a job, the pros and cons, the myths, the truth about this, and then we can open it up and look at the charts, okay, and see where things are at now that the world is moving into 2014. And officially, really, in Europe, it's the first sort of trading day of the year. So usually what we see is kind of what's going on in this chart here on the pound yen. Usually see some really great moves in January. Not always, but usually January is a great month for trend traders and breakout traders. So that will be something that I'd like to take a look at as well. Thanks, Alan. All right, so we can do that. But at the beginning here, what I really want to do is talk about what we planned on talking about today, which is this idea of trading with a job. Now, how many traders here at the webinar right now, and I know a lot of you are watching the recording, and welcome to you as well, but I just want to make sure that you understand how rare it is, because I'm going to ask this question. How many traders here today are only trading and they don't have a job? So your only source of income is trading. Well, it doesn't necessarily have to be your only source of income, but your primary source of income is not going to a job during the day. So who here is trading and making money trading, and really, you don't have to go into an office or a garage or whatever, a workplace of some sort? Anyone here? You can just give me a private message if you don't want everyone to see it or whatever. You can just give me a Y for a yes. Because here's the thing, guys. Excuse me, having a sip of ice water because it's been a hot day here in Australia. Very hot today, actually. Here's the thing, guys. Most people don't trade for a living, right? Most people trade on the side, right? So here's the thing. A lot of what happens, actually, I'll let you tell me, because I don't want to sit here and tell you what people think or what people say. I want you to tell me what you think and what you believe, because I think what we'll hit on is exactly what I plan on hitting on today. Number one, what do you think would happen if you were able to concentrate on your trading full time? So what's the number one thing that would happen if you were able to concentrate on your trading full time? Anyone have any ideas about that? Go ahead and offer your comments in the box there, and I'll see if we can put up on the screen. Yeah, Frederick, exactly. Yep. Okay, so here's what's happening. Here's what's happening. Sheik is saying that we would overtrade. Dave R is saying that we would all overtrade. Minaj is saying greater returns. Pan on Fire is saying happy if I'm making money. Mark is saying he'd have to deal with fewer wankers. That's got to be the best answer. Thanks. Yeah, Pan really likes that one too, Mark. If Ian says if you trade full time, you have the option to trade intraday. Frederick, I think really nailed. I think Ian and Frederick are really onto it here. I mean, everyone is obviously right along the right track, I believe, in my opinion, which is Frederick says you have the risk of moving to lower time frames and to start gambling. And that, my friends, is exactly, I think Frederick and Ian have sort of summed it up. So there's two sides of the same coin. Frederick is saying you could move to lower time frames and start gambling, and Ian is saying you could trade the intraday charts if you want to. And that's really the number one draw for most people when they say, if I could quit my job, I could trade full-time trading equals intraday trades. Okay? Now, I know some traders, not mentioning any names, that have jobs, and they will go and, well, they trade the 4-hour charts. A couple of traders I know do this. They trade the 4-hour charts, and when a trade triggers or they have to manage a trade, they have a job, they both work, and what they'll do is they'll just run to the toilets and they'll check their smartphone and manage their trade from the toilets. And some people have started to suspect that one of these individuals, has some problems with his bowels or something like that because he's always off to the toilets. But so it is possible, obviously, to, depending on your job, it is possible to trade intraday. I know a lot of truck drivers actually do this. So people in the States who drive long distances, they will actually trade as well. Not because they've got their laptop out while they're driving, but because they spend so much time on the road. It's kind of easy to pull over and check things and that sort of thing. So it depends on your job, but it is possible to do intraday trading on, say, like the 4-hour charts or something like that, or maybe the 1-hour charts, if you have the right kind of job and the right kind of situation. But what most people are looking at when they're looking at moving full time is they're looking at this is the carrot that is sort of dangling for those people who want to quit their jobs. It's this idea of intraday trades. It's this idea of making more money because you get to trade more often, right? That's the number one thing that people are usually looking for when they decide or when they consider that, they could quit their job and just trade full time, okay? Dave says I could get through my back testing faster. Isn't that the truth? The stress of trading, Ian says the stress of trading can require frequent trips to the toilets. Yes. And it's not always just managing the trades off your phone, is it? So that's the number one thing, okay? And what I want to do here is I don't want to necessarily deconstruct all of these arguments, but what's another argument that you would have for, going full time and getting out of your job? What's something else that you can think of in terms of, I have this job, I'm spending 55 hours a week at my job. Maybe it's 60, maybe it's 40 or 38 or whatever. But you're spending a lot of time even probably commuting to your job and going to work, coming back. There's a lot of missed opportunity. Now, the good thing about Forex, of course, is if we trade the currencies, we know that we essentially have almost a 24-hour day. Not quite. It's closer to like a 22-hour day with the interbank market, things like that. But basically, we're looking at a pretty solid round-the-clock market, 7.5 days a week or whatever it is. And 5.5 days a week or something like that. So what that means is, we have, or 5 1/3, I guess you could call it. We have opportunities even if we do work. So if you work in the United States, you might trade in the evening when the London market opens. If you live in Asia, you might also trade in the evening when the London market opens, or you might trade in the early morning hours when the New York market is open. If you live in Europe, which many of you do, of course, you would probably be trading, if you're not trading the European markets, the London market, you might be trading the New York market in the evening when you get off your job. So there's lots of different ways to do this with a job, and that's why so many traders who have jobs are also currency traders. Forex trading has a huge number of people that have jobs, as you all know. Now, what is something else? So here's Mark says, this is really interesting. I think quitting my job as the reward, the result of good trading, not the means to it. I think that's a really interesting line of thought there, Mark, and I'm glad that you posted that. That's a very good point. Because I actually, and I'll get into this in a moment, but I believe along the same line. Pan on Fire says boredom. Pan, one of the traders that I first started working with years ago was in a bank in Switzerland and had a goal of leaving Switzerland and moving to a warm location. And this trader, I explained to him that when he got really good at his trading, it would become boring to him. And he said, there's no way. It's so exciting for me. It'll never become boring. I believe you, but I kind of can't see it ever happening. Well, fast forward a few years, he quit his job at the Swiss bank, and he moved to Asia where it's really hot, and is a full-time trader. And he wrote me recently, and he said, now I know what you mean about boredom. And I think you're right, Pan, is that one of the good things about trading, and when we know that we've kind of hit our groove as a trader, is it becomes boring. Because what you're doing the same thing over and over again. And if you want to get creative, you can do that. But to me, creativity is sort of in the back testing arena, not in the live trading arena. So all that creativity can come out, but for me, it comes out in places like Forex Tester. So I agree with you. I think that's a good point, Pan. Vittorio says that vision, belief, and strategies and knowledge comes from trading. Mark says he wants to trade 7.5 days a week. Yeah, sorry about that. I had a brain fart. So, do we need a stop loss? Al747 says, do we need a stop loss when trading intraday? I would definitely recommend it. Pan said he meant his job is boring. Oh, sorry. Well, I'm glad that you confused me, because I think most traders, when they hit their groove, they find that the trading itself is boring, and that becomes their job, really. Yeah. Sound is fine? Okay. Jake, I think it might be on your end, unfortunately. So, here's the thing. This is some of the stuff that comes up when people say, oh, I really need to quit my job. And as Mark said, it doesn't have to be a thing where your trading gets better because you quit your job. What it could be is once you get really, really locked into some solid trading, you can quit your job. And that's the way I look at it. And I'm going to get into that in a minute. But let's talk about number two. The number one thing is, if I trade full-time, I will get intraday trades. Number two is usually something along the lines like this. Full-time trading equals better results. And this comes up in many different arguments, but things like, oh, if I trade full-time, I'll be able to concentrate better, or if I trade full-time, I'll be able to have better results, or, you know, I was at work and I didn't see I was supposed to move my stop loss to break even. All those sorts of things bite me when I can't manage my trades, but when I'm at work, I miss that sort of thing. So maybe I would have taken profit when it came within a whisker of my take profit, you know, if I were at home watching the charts or something like that. So that's the other thing that comes up along. The number one thing is missed opportunities, right? We can trade more often, maybe intraday. It doesn't have to be intraday, but most people will say that they'll have more opportunities by dumping their job. And another thing that comes up is that they'll actually trade better if they quit their job and they're trading full time. So that's another one that comes up. Okay, so let's move to number three. Full-time trading equals trading more systems. I can concentrate on more systems if I'm trading full-time. Now, there may be some truth in this. It may be that perhaps you're trading, you know, a 1-hour chart system and a 4-hour chart system and a daily trading system if you're trading full-time. But if you have a job, you can only really concentrate on the daily trading system. You know, something like that. So you're restricted in your time frame. So that could be true. But generally, there usually isn't a reason why you can't trade the same systems if you're at work. You just have to refocus your time frames. And I'm going to get into this because there are a lot of objections that traders come up with And I'm going to talk about why I think they're actually like straw men and they're not real. I think one of the things that people, one objection that comes up a lot is, it relates to number 2, which is my results would be so much better if I were able to trade full time, because as a daily chart trader, they say this, as a person with a full-time job, as a daily chart trader, they say, whoops, that was a mistake. They say this. I cannot afford to trade the daily charts. This is the biggest one that comes up, okay? I cannot afford to trade the daily chart. In other words, the daily chart, for example, let's look at the chart here. Let's just quickly pull up the yen. No, let's not do that. Let's look at the daily, the Aussie. And let's say that I'm trading the Aussie dollar right here off of this bearish candle right here. I say the market goes up, prints a large bearish candle, and I want to sell it down here at 93.10, and my stop loss is above the high here. It's 141 pips away, okay? So I've got 141 pip stop. So that's what a lot of traders will say. I can't afford to take a trade that's 141 pips away. I just can't do that, right? And what do you guys think about that? What do you think about that? I can't afford to have 141 pip stop loss. What does that make you think? Pan nailed it. Pan says reduce your stake. Frederick I'm thinking risk to reward. Here's where people get into trouble with daily charts. Like, we could even look at the pound yen here and saying there was this big bullish candle. We knew the market was going to go up, so we decided to get in here on this little retracement move. And as soon as the market broke above this little green candle, we went in and we put our stop loss down here and we bought up here. That's about 370 pips of risk. And some traders will say, I can't afford to take a trade on the daily charts with 370 pips of risk. That's too much for me. Well, yeah, so Ian says, look, Ian has a couple of good points. First of all, full-time trading leads to more decisions, not necessarily better ones. That's absolutely true. Unless you structure your life as if you had a job. Which is difficult, but it's possible. But yes, you're absolutely right. The other thing that Ian says here is the first broker I looked at had a 1 pound per pip stake minimum. So 141 pip stop is a problem for me as a beginner because I'm risking 141 pounds on my trade. And yeah, so Sheik is saying, do you mean that the person's account is too small to have big stops? Yes. That's right. But Pan is right. You can reduce your stake. And here's the thing that Ian and Pan are bringing up here, and Sheik. Basically, you have an opportunity to go to another broker. There are many, many options. And that broker will allow you to set your own lot size. And this is really the critical thing here. This is what's going to make the difference for you if you have a job. And if you think that I can't afford to take weekly chart trades, which I love to take, or daily chart trades, if you say, look, I just can't afford to trade these, wide stops on the daily or weekly charts. So what you need to do is go to a broker that allows you to set your own lot size. Because you should be able, let's say I've just started trading Forex, I've done my testing in Forex Tester, I've got a system that works, and I'm ready to go live. So I get my 500 pound account. So I've got 500 pounds of risk money, I set it aside. If I lose it all, too bad. But I want to trade that, I'm going to go, you know what? This looks like a good trade on the pound yen here. This is one that I was actually looking at. I said, well, maybe I'll get in if the pound goes up to 170.41, and I'll move my stop down here to 166.79. That's 361 pips of risk. Okay, and so I've got a reward up here at 178.16. So what was that? It's like 700 pips, right? Risking, so it's better than 2 to 1. And so I go, all right, I'm going to take this trade. But then I say, wait a minute. If I'm trading for a pound a pip, I can't risk over half my 400-pound account to take this trade, right? That would be crazy. So what I need to do is I need to set my own lot size. And if you don't have a broker that allows you to do this, I would do that. If you have a job and you feel like you have to trade the 1-hour charts because you feel like you can't control your risk on your trades, you have to have those 1-hour chart trades that have, 25 pip stops or 30 pip stops. Really, I would argue you are much better off switching to a broker that allows you to set your own lot size so you're trading for 12 pence per pip or 12 euro cents per pip or 8 US cents per pip or whatever it is. Because those brokers are out there. And it's not a problem to find them. All you have to do is switch. And what that will do is it will immediately do a couple of things. One is you won't be so stressed when you're in a trade because, like, for example, in my little 50-pound account, 500-pound account, I can risk, if I want, I can risk 10 pounds on every trade, right? I can risk 10 pounds on every trade if I really, really want to. There's nothing wrong with that. So I can set my own lot size, and even if I do have 363 pips of risk or whatever it was here, I can work that out so it's only going to be a 10-pound loss if it stops me out. And what this does, it allows me to sleep at night and not be worried about my trades. It allows me to take all the trades I want because I can reduce my risk down so much. It doesn't matter how tiny my account is. I could have a 100 euro account and still be able to set my own lot size and still take all the trades I want and trade the weekly charts. Not a problem. So that's the first myth that I want to make sure that I sort of, this is something that I know it feels like it's a hurdle, but it's not. There's no reason why you can't take these trades in the daily and the weekly charts. And here's why I would encourage you to do that. Because as a person with a job and probably a family and friends and people that you have to spend time with, or you want to spend time with, I should say, you really need to juggle a lot of things, right, as a person with a job. So how do you do that? Well, you couldn't become a zombie and watch the 5-minute charts every night when you get home from work for 5 hours, or you can simply move to the daily charts and manage your trades twice a day, before you go to work and when you get home. If you really need to, you can check them at lunchtime if you can, if you've got that freedom at your job. So these are the sorts of things that I encourage traders to do, because what generally happens is that traders who trade the daily charts or even the weekly charts, if you can wait that long for these trades to happen, they learn the principles of naked trading so much faster because they learn the patience, they see these things unfold, they believe them when they happen. And then later on, if you want to ratchet it down to the 4-hour charts or lower, you can do that. It's just so much easier to start at the higher time frames. Because let me explain something. You guys, maybe you don't believe me, but they've done, the neuroscientists, I don't know if many of you know, but I'm a psychologist, right? I'm not a neuroscientist, but not a neuropsychologist, but I went to a school where there was a lot of students who were going through the neuroscience program. And in the neuroscience program, people were doing all kinds of cool research with the brain, and I had some friends, some good friends, that also did research on the brain in other institutions. And they did wild things. So I kind of learned a little bit just from, being friends with these people. Didn't really get deep into brain science. I was more into decision making. That was kind of my area was thinking about your thinking, which is kind of a funny thing. It's great if you're a trader to think about your thinking, but that's probably beside the point. But one of the things I want to point out here is that This is what neuroscience has taught us. When you're trading the 5-minute chart, guess what that's like for you as a trader when you're trading the 5-minute chart? You know what that is like? You know what the equivalent of trading this crazy-looking pound yen 5-minute chart with all these wild wicks on here because the London market's open. What is that? What is another thing that I can do as a person that's similar to trading this chart? Anyone have any ideas? I don't know if anyone's read the research. Al747 asks, how do you calculate the amount of risk to the pips? I'll give you a spreadsheet if you want it. Al, if you email me, I can give you a spreadsheet, okay? And it'll do that for you. Go to the casino, says Alan. Awesome. Awesome. That is awesome. Skydiving, yeah. So it's the same thing. What happens when I trade this chart? Let's say I want to buy it right here because it's down where the support was back here in, last year at 31st of December. So I say I want to buy here. On the first green candle I get, I buy, okay? If I take a 5-minute chart trade, what I'm doing, according to my brain, is no different than taking a drug like cocaine, okay? And that affects my brain in the same way. It affects the pleasure center of the brain. And that doesn't, and let me assure you, that does not happen when you trade the weekly charts. When you trade the weekly charts, it's like the librarian area of your brain. No, I'm just kidding. But basically, so what happens is you get addicted. Does anyone know what the most addicting pattern is? What is the most addicting pattern for humans? What's the most addictive thing for you to do? Any ideas? Yes, Manoj, very good point. The most addictive pattern, Fibonacci. Good. Well, that's a good guess, Schumann. It's not actually. The most addictive pattern, well, maybe if you're in Japan, Mark. The most addictive pattern is random interval reinforcement. And what that is it's the same as what you call the slot machines in the United States, or what they call in Australia the pokies. So random interval reinforcement. What that means is you get random winners and random losers. That is the most addictive pattern. Yes, Schumann, it is. I think they all of them are. Yeah, they're all recorded, Schumann. Yeah. So random interval reinforcement. This is what you get when you play the slot machines or the pokies. So sometimes you win, sometimes you lose, and you keep coming back for more. Same thing happens when you get into these lower time frame charts because you're getting immediate feedback. Okay, that's the key here. When you trade these lower time frames, like the 1 minute or the 2 minute charts, I have a friend who trades the 3 minute charts, the 5 minute charts. When you're trading these lower time frame charts, you get almost immediate feedback. And so that leads to this random interval reinforcement, which is some winners, some losers. Okay? When you trade the daily charts or the weekly charts, you don't get quick reinforcements. Quick reinforcement. In other words, you don't know if the trade's going to be good until days and weeks and sometimes months later. I had a trade on gold where it was a weekly chart trade, and it was here on this candle. And if you follow my trades, you know about this one. Look how long it took. I mean, this is crazy. It took 4 months, right? It took 4 months to finally come. I mean, it only took a couple of weeks to get to target 1, but target 2 wasn't achieved for like 4 months. So that's the kind of thing I'm talking about here. And that's what happens when we trade the lower time frame chart. So that's another reason why it's a good idea to at least think about trading the higher time frame charts. Why? Because we don't get addicted to this stuff. And that's simply what we do get when we're trading the lower time frame charts. It's no different than being addicted to a drug or gambling. I'm not saying that it's gambling. That's a very different thing. All I'm saying is that it is, in fact, the same area of the brain that's lit up, okay? So that's something to be aware of, okay? That's all I'm going to say about that. Now, so there's a couple of objections here. One is that I can't afford to take the daily trade. But we've already taken that out, right? That's something that you can control on your own. You can move to a broker that allows you to set your own mark files. There are many of them out there, and many of them linked up on the web page. And I'm sure that you can find those here, where you are today. Also, this idea that if we are trading full-time, we've got more opportunities, or we can do intraday trades. I was just talking to a friend of mine, Colin. Many of you know Colin, and I hope to get him on here someday where we can interview him and talk about his experience as a trader, because he's had a really unique experience. He's been hired by hedge funds, and I would love to get him on here so that we can grill him and he can offer us some tips on how he was able to lock down these jobs, because I think that would be really interesting to you guys. And some of you know who Colin is, but let me just say that Colin and I were talking about this the other day. We're talking about trading on the road and what it's like to be a trader and have your trades and still be on sort of a mini holiday or in a country that you're not from or you're not familiar with. And what Colin told me is he was on holiday once. He didn't really go that far, but he took a trade at the beginning of his holiday. It was in the summer, I think. And he placed it. It was on the daily charts. And you know what? He forgot about it. He forgot about it for several weeks. I think it was like a month later or 4 or 5 weeks later that he went back and he realized that he left the trade open. And that trade ended up being like a 5-to-1 or 6-to-1 reward to risk ratio. And it was the best trade he took all year. And you know why that happened? Because he wasn't sitting at home watching it. Because sure enough, if he was sitting at home watching that trade, he probably would have closed it out. He probably would have taken profit early, and he probably wouldn't have cashed in like he did. And that's one of the things that I try and encourage people to do when you go full-time as a trader, is try to set up some structure so that you're doing things like, walking the dog, going for a coffee, visiting friends, having dinners out, going for a run or a swim or whatever you ride a bike, whatever you like to do, getting away from that, because what it allows you to do is have that structure that you would have if you had a job. Because if you had a job, think about it, you'd be doing things like you have to catch the bus or get in your car at a certain time or get on the train or the subway. You'd have to be home at a certain time. You'd have to go to the gym or, go to bridge or, golf or whatever you do. Whatever your fun things are to do, you do those in sort of a semi-routine. But as soon as you dump your job as a regular worker and you go full-time trading, you lose that structure. And that's actually, by the way, this is one of the things that's unknown, but a lot of people don't know this. Traders who trade for banks, and there are many out there that I know, and they'll tell you this, they actually have this problem. They go to the bank, they learn how to trade, they get really good, and then they leave and they go and trade for themselves, or they set up like a little sort of private fund, and then it all goes pear-shaped. And you know why that is? Any ideas about why that might happen? Schumann says lack of discipline. Mark says no one looking over their shoulder anymore. Ian says no structure. They start trading different times. Yep, that's right. You're all right. Yeah, because their money, it's their money. That's a good one, Pan, actually. They're trading their own money compared to the bank's money, says Girish. Yeah, so what happens is when you're at the bank, you have a risk manager, and that risk manager will tell you, this is how it works. This is really how, I know risk managers. This is how it works. You've got an amount of money that you can trade. Let's say it's, it doesn't really matter. Let's say you've got 95 million in that you're responsible for. And guess what happens if you have too much risk on the board at any given time? You get a tap on the shoulder from your risk manager, and they have a little chat with you, and they'll tell you that you've got to lighten up here on your positions because you've got a book of 95 million and, you've got 95.6 at risk right now. And even though everything's going well, you better watch yourself and take care of business and get back down to where you're supposed to be, get to your number, because everyone's got a number, right? Okay, so you do that. Let's say you even make money. Doesn't matter. You do the same thing. Let's say a couple years later, you're up to 125 mil or whatever it is. And now you're at 125.2 at risk. So you're all fully loaded, you're locked in, and guess what? You get another tap on the shoulder from the risk manager, but this time the risk manager isn't so nice. What he'll say to you is, well, that's it. See you later. And that's it for your job. You just lost your job because you couldn't manage risk. Because the banks know this. They can teach anyone to trade, but they can't take the gambler out of a trader. So those guys that are taking too much risk, they're gone. And that's exactly why bank traders and private fund traders who go off on their own, they lose. A lot of them lose. It's a little known fact, but it's true. And the reason why is they don't have that person over their shoulder looking and making sure, they're basically not accountable to him. So there's a tip right there. You can build that structure into your life by being accountable to someone with your trading. That's going to help out a whole lot, guys. That'll help you out a whole lot, just doing that one thing. Okay, so I just want to make sure that all of these things are covered here. So here are some of the goals as a full-time trader that I would say. First of all, if you're not full-time trading and if you have a job, that can be a really good thing. A lot of traders do really well just by not sitting around and making decisions on the chart. Okay? So that's number one. So don't stress out about that. Second thing is, if you do get to the point where, let's say, you're tripling your income that you get from your job by your trading and you want to get out of that job, I generally say you kind of want to get to at least double of your job income and then, think about making the jump. But let's say that you're doubling, let's say you're tripling your money that you get on your salary or your job. Well, guess what? Now, what you can do is you can build in that structure. Have someone that you're accountable to, that you report to every week. Have some sort of, or every month or whatever it is, every day if you need to, if you trade that frequently. Have a system in place that gives you time to, stay fit, do active things, whether it's hiking or playing golf or whatever you like to do, and build that into your routine so that you have basically a job as a trader, even though you have the freedom that you want, but you also have that structure, because that's going to help out a whole lot in terms of keeping you on top of your game. And that's why a lot of traders, when they make the leap, they don't do as well as they thought they would have, simply because they don't have the structure that they did when they had to go to work every day or 5 or 6 days a week. So hopefully that helps. Now, the other thing I would say is that don't be afraid to trade the daily and weekly charts. You can set your own lot size. Just because you can trade intraday trades doesn't mean you should. You still have to vet those with your back testing. And obviously, just because you're trading full time doesn't mean you have to trade more systems as well. Those systems should really go through a process of becoming, your children, so to speak. And for me, that process is back testing the system in Forex Tester or some sort of program like that, where you can, it's a trading simulator. Then a small account, and it really has to do well in that small account, and then it moves on to the live account. And just moving it along those steps. Most of them die, by the way. Most of these systems that I think are going to be really hot, they die in that first stage in Forex Tester. They just they're just not good enough. So they don't work. And they don't work enough to make it worth it. So hopefully that helps. Now, let's take a look at the charts. Does anyone have any charts that you would like to look at the moment? Any charts that are really interesting to you? Most people are usually pretty happy about trading the euro. The yen, okay? The yen. Yeah, some of these yen pairs are kind of moving up. Vittorio wants to take a look at the yen. Basically I had it on this little wedge here, and it was a breakout. It came back, didn't really quite hit this line here, but it's going up. I don't really have a buy or a sell either way on this one. If you back it up, what you'll notice is we are right about here. Let me draw in some support and resistance lines actually on this chart, Vittorio, because we are up in that area. What you'll notice is that we're really close to 106. That's about 70 pips away, and that would be my next zone here. And that's kind of where I would be looking for a possible sell, or at least for the market to retrace on this pair. At the moment, I don't really have a buy or sell, to be honest. I'm just kind of watching. I wouldn't really go either way. I know some people might look at this and say it's a trendy kangaroo tail or something like that, but for me, that's not. It would have to pause here a couple of days at least, and it really only has the one pause here. And plus the tail doesn't really, it's not long enough, it doesn't stick out enough. So I would definitely say that this is not a trade for me at this stage. Okay, cool. Al747 says, let's take a look at the Aussie Kiwi. One of my favorite pairs to trade. I love this sucker. Yeah, so on this one, what I would love to see, Al, is I'd love to see the market get up to this area right here, which is the 109.60 area where this gray box is, and print a bearish candle. I think we're in sort of the retracement mode. So we're going up, retrace, up. I don't know if we're going to hit 111 or 109.60, but I would look for a sell, a bearish candle there. That's kind of what I would really actually like to see, it print a bearish candle right there. That would be the best to me. That would be the best move if it were to go there and print a really nice fat red candle. Like this candle right here. That's a nice one. That's a nice one. That's a nice one. That one. That one. This one not so nice. These little tiny ones wouldn't really be enough for me. I'd want to see a pretty big one like that one. Or that one. So that's kind of where that's at. The Euro Aussie asks, oh, no, I don't mean it's going to move down. Okay, so let's talk about this one. This is a specific trade, Al, that I call the first touch trade. I think we're going to do a webinar just on this trade this month. I think we've got one planned later on in the month. But basically, this is the first time the market's come to the significant level right here. So you can see where there's support right here. If you go back in time, actually, I don't know if we... Yeah, here it is. There's some touches down here as well. And some touches kind of, but they're actually a little bit lower back here in 2007. But so what happens is when the market gets away, breaks through a level, and then comes back up and touches it for the first time, it's a really, really fun trade. So the only reason why I would look for a sell right here is because of all these candles that got hung up there and couldn't break through. 4 days it spent on that level before it finally broke through on the 5th day. And so now I would expect for it to have some real trouble getting through there. But I still need to see the red candle to confirm that, right? I don't know. It could get there and hold there and then bust through. So I really need to make sure that I see a nice red candle like one of these ones that I highlighted before to give me that. And then I would put a sell order below the low of that candle, my stop loss above the high. And then what I would probably end up doing is I'd take 2 profit targets, and I'll show you why. One would be right around where we're at right now, where we had a low today. And that would be off of these lows right here, where the market got hung up right here. And then where it probably is going to bounce today. I don't know that this is the case, but I strongly suspect that it'll start moving back up here. So that would be target number 1. And then my second target would be down here. And that would be in this area right here. So we can put numbers on this as well. Because this may actually show up in the next couple of days. Maybe next week we'll have a trade. And we'll revisit this one. But basically I would say a target on this one would be right around, what's the low on this candle? 108.27. So that would be right around 108.27. And then the next one would be down here. And I would go with just sort of the close right here on this candle. which is 107.50. Nice round number. Doesn't really matter if it's a round number, but that's where that first bearish candle closed. And so I would go with that one as a target. Again, stop loss would be above the high of that big red candle, Al, and my sell order would be 5 pips below the low of that big red candle. But we'll talk about why I don't take them during the Asian session and all those sorts of things later on this month. And the Euro Aussie, okay, let's talk about the, no, I wouldn't be buying now, Al. No way. No way. I would wait for my bearish candle to show up. Yeah, Vittorio, essentially, yeah, it's supply and demand, yeah. Naked FX Victory wants to see about the Euro. Tina wants to see the Euro Aussie. Tina, Euro Aussie? Really weird chart, Tina. Are you in any trades here? See, because to me, this is kind of a nice chart for a potential bounce off these highs here. It just hasn't come back down here. There's two places where I would like to see it come back down and bounce. One would be on those highs, and the other one would be right here on this zone, around 1.49. I don't really have a sell here, Tina, because see how today's candle is an inside candle and it's kind of ramping up? So I don't really, I don't really have a buy or sell either way on this one. I suspect it'll probably start falling, and if it breaks through this little minor level here, I'd love for it to get to this area at 51.25, or this area down here at 49.10. And those are the spots where I'd look for a buy trade on that one. The Euro is really tricky. You know, it printed this bearish candle here, and it came down to this level, which I knew was going to be a problem, and then spiked back up. And so I actually had a nice trade on here that got spiked out. And this is what happens a lot, you know. If you hold these trades over Christmas, you expect to see some volatility. You know, that happens almost every year. It's easier to push the market around. So at this stage, I don't really know what's happening, but it does look a little weak here. It does look like it wants to make another run at 36.50, but at this stage, it's a no, who knows? You know, it's a no, it's like I don't know what's going to happen. The best move, of course, was on the pound yen here, where we had this brilliant bullish move. It came back down and touched right on top of these highs, printed a bullish candle, and then it's off to the races. And you know, the 178 area to me is the next, that's like almost 400 pips away. That's kind of the next area to take profit on this sucker. That was a really nice, really weak move down, followed by an explosion up. Pan says, Walter, how much are you adding to your knowledge of trading, or do you just keep your trusted methods? Does learning level off when trading naked? No, actually, that's a good question. Does learning level off when trading naked? What I found is that you pick up on little things. You're always kind of learning. You know, you will find, like, traders who even use indicators will tell you that they, after years and years and years, you know, this is, you know, the guys that have been around for a long time, the guys and gals, they'll tell you that they can look at the chart and they'll know what their indicators are saying. And it's true, they do. They can. They're not lying. And the reason why is because they've slowly paid attention to price accidentally. So even if a stochastic trader has been trading for years and years and years, stochastic trader could look at this chart and say, you know what? This chart is overbought right now. Now let's see if that's true. It is. See? It's overbought. It hasn't come down through the 80% mark, but just by looking, you know, by being a stochastic trader all these years, stochastic trader sees this chart and says, yeah, it's overbought, you know. Not saying that you should sell when it's overbought. I'm just saying, you know, some stochastic traders might think about that. So that's the kind of thing that you get over time. Now, the other thing that's interesting about that pan is that you find nuances. And so, like, for example, I've noticed over the last 3 years, I've been able to really get into defining a trend just by looking at the candles. In other words, which phase of the trend are we in? In this chart right here, this looks like a trend that is still on its way up. And we've had whole webinars on that idea. We probably don't have time because we're going to have to shut it down. But we only have probably another minute here before we got to go. But basically, there are little patterns that you pick up on in the candles themselves and groups of candles and things like that. So hopefully that answers your question. And the other thing is you can get really creative. Even as a naked trader, there are still lots and lots of ways that you can get creative. Like, for example, this pattern itself right here could be considered a breakout pattern. What you have here is a bullish candle. Now, it did sell off a little bit here, and there's a little bit of a wick. But then you get an inside candle here, and then you get a bullish candle that closes right on the zone here. So this is a support and resistance zone that I've drawn here at 174.25. And so long as the market trades higher than this candle that printed on the 31st, and today it has traded higher, this could be a breakout trade just based on this engulfing candle up against, there's an inside candle, which is a pause in the uptrend. Then there's a huge, strong close here right on the line, on the zone, and then we've traded higher already. So this could be, in itself, you could trade just this pattern. Inside candle followed by a huge bullish candle right up to the zone. And then as long as the market breaks higher, which it has, that could be a buy trade. And the stop could be down here, for example. So this could be a trade with about 170 pips of risk, and the reward is all the way up here at 178. So 178, that's a pretty good, and you're looking at 350 pips on that one with 180 pips of risk. So that's an example of a thing that you might see over and over again and decide, okay, this is a new pattern I want to test. This is a pretty reliable one. I've noticed this one, and I actually get excited when we see inside candles followed by strong candles. The key here is really this candle. This is the candle to pay attention to. Is this? Yes, the 31st. That's the one right there that tells the story. Now today we may have only broken higher during the Asian session. In fact, that's true. So I would still probably wait for the market to trade higher and go to say 174.82 or 174.83 because these highs were made during the Asian session. And I don't like to trade off of Asian session highs or lows. I like to see those highs or lows made now in New York or London market. Okay. Okay. Does copper price help Aussie dollar? Yes, it's better than gold, Frederick. At least the last time I ran the correlations, it was. The last time I ran. Any fundamentals? No. No. I like the charts, Al. Not filling in the gap on the euro, that's true. But we still have time for that, so. We still have time for these gaps to fill. I think you're talking about, let's see here. Talking about this one, which was really close, though. If you're talking about this gap, boy, was that close, because the close was right here. Boy, that was really close. That was looking at, 5 or 6 pips. All right, folks, I really appreciate spending time here today. I hope you have a wonderful trading week. We'll see you in the next session. Thanks for spending time here, and I hope to see you soon. Thanks so much, guys. Thanks, Alan. See you, Frederick. Bye, Tina. Take care, Pan. Have a good one, guys.